Is your mortgage rate watch for Monday, February the 7th, and I'm Keith Akada with the Mortgage Reel. Well, we're starting off the week in the same pattern that we opened and closed last week. So what it's really coming down to right now is the pressures of two things. Coupling the market right now is Treasury Department is going to be auctioning off $32 billion in 3-year notes on Tuesday and $24 billion in 10-year notes on Wednesday and $16 billion in 30-year bonds on Thursday. Tuesday, Wednesday, Thursday is going to be extremely volatile. All depending on the results of these auctions is going to sway the market either hopefully a floor of support or it could push again once lower if these bond auctions don't go off very well. Three major factors that are influencing the bond markets and the mortgage markets to take a tick higher. One is the cooling off in Egypt. Still there are concerns, obviously, but since it's cooling off, it's got the stock market going back up. And keep in mind that we are the safe haven, so when that money is moving out, that's putting pressure on the bonds. The real concern is really coming from the global inflation and what's going on there. The technical signals still show all over the world that inflation is starting to kick in. Once again, China is going to start to have some numbers that are going to come out to really show what's going on with inflation there. And then also here locally, we're really seeing the prices and the damages with this long winter on the East Coast that's having, the barrage of storms that they had that creates more snow, the heating and fuel costs that are starting to go up, and then also the concerns of what's going on around globally with the cost of fuel, the transportation of fuel, what happened in Egypt with the shutdowns, what happened with the Alaska oil pipeline. A ton of that has just all concerns over fuel consumption, and now set off going with an improving economy when people are off traveling again for the summer. That's going to increase more fuel consumption, and this is all going to spur the inflation. So right along with the cost at the pump that we're slowly seeing trickle up day after day, it seems like, that's definitely spurring inflation. And with inflation, keep in mind, every time media mentions it, stock market mentions it, it's the arch enemy of the bond market. And guaranteed, when you're hearing the word inflation kick in too heavily, we're definitely seeing the damages being done to the mortgage market, increasing rates. More to come from Homeowners Education 101 as we put the final touches on the 2011 forecast for housing and mortgage rates. Leave any comments or feedback below, as it's not only appreciated by Team Mortgage Reel, but also by current and future viewers. Join the conversation on Facebook at How to Beat the Banks and like us when you're there. Otherwise, we'll be back tomorrow with more updates on your mortgage rate watch.